can be hard. It can be complicated. Many people feel overwhelmed when it comes to investing. I've been an investor now for 24 years and I've had to learn the hard way. I know what it's like to struggle financially, and I'm sick of seeing people I care about struggling in their 50s and 60s. That's why I'm so passionate about investing. Today, I'm going to tell you all about my investing community on school. I'm going to tell you some of the most common questions I've been asked in my school community and online in general over the last 12 months. But first, I'm going to give you a personal story of why investing into assets is massively important. Let me tell you about me as an 18-year-old. Now, unfortunately, I wasn't taught about money or investing at school. I had zero financial literacy, but I did start investing as an 18-year-old. Unfortunately, I only done it for 6 months. I invested £500 a month and it was stocks and shares ISA, but after 6 months, I spent all of my savings on a lad's holiday. Huge mistake. Now let's assume I invested into something like the SP 500 within my stocks and shares ISA, £500 a month, and I got average returns of 10%, and I've done that from then until now, so a full 24 years. I would have ended up with a huge £592,000. Now, when you look at that figure, 450,000 is made up of interest earned, a huge amount. This shows the importance of investing, and it also shows the power of compound interest. Hopefully that little personal story has nudged you towards investing. Now, it's pointless for me in my early 40s, regretting what could have happened, should have happened when I was 18, 19, 20. What we've got to do is focus on now. The best time to invest was 20 years ago. The second best time to invest is now. So hopefully after this live stream, you do start investing if you don't already invest. So let me tell you about my school community. School is a platform where you can learn just about anything, but it's also about building a community, building relationships. On school, you can learn things like cooking, how to do a YouTube channel, how to trade, how to do jiu-jitsu, how to invest, like my investing channel, Complete Investing. Now, what do you get inside my school community? Well, the most important thing for me is you get around other investors, hundreds of other like-minded investors. You can ask me anything. There's course material for you to complete. You can do the courses and then ask me about them if you're confused. There's a weekly newsletter, a monthly group call, and you can also jump on a one-to-one call with me. Basically, I'm trying to give you one-to-one support to help you with investing with my experience. So you can invest in the stock market with low-cost index funds with confidence. So you can invest long-term, build wealth, and potentially retire early. Now, for the rest of December, my school community is free. So if you're interested, have a look on my YouTube channel. In the description, there's links in my YouTube channel for my school community. If you want that one-to-one support, if you do get overwhelmed with investing, if you're confused, you might be lonely. You might want to get around other investors. Well, you can for free by joining my school community. So that's me plugging my school community. Now I'm going to tell you some of the most common questions I've been asked over the last 12 months. The first one I'm going to tell you about is how to set up a new SIP as a self-employed person. As someone who's self-employed, a SIP is one of the most tax-efficient ways to save for retirement. You're paying from your personal income, you get 20% tax relief added automatically. For example, you pay £80, your SIP gets £100. This shows 25%, but for some reason, everyone says it's 20% tax relief for basic taxpayers. Another example, you pay £100, your SIP gets £125. In the above example, your SIP provider claims the tax relief on your behalf. If you're a higher rate or additional rate taxpayer, you can claim extra through self-assessment. So you pay £100, your SIP gets £125, and you can claim an additional £25. So there's massive tax advantages by investing with your SIP. And if you do have a limited company, whatever you invest comes off your top line. So another tax saving. Basically, it's quite complicated how they work it out, but you're getting really good tax relief. The age you can access your SIP is currently 55, rising to 57 in 2028. When you do access it, you can take 25% out tax-free. The rest is taxed as income. SIP providers include Vanguard, AJ Bell, Hargreaves and Lansdown, Interactive Investor. Vanguard is simplest and cheapest from my experience. AJ Bell, more choice of ETFs, more options basically. Hargreaves and Lansdown, again, you've got loads of options, but it's also known as good customer service and easy to use. I started with Vanguard and now I use Hargreaves and Lansdown. But don't take that as advice. Nothing in this live stream is advice. I'm just literally trying to help you with my experience. Moving on to the next question. Can you combine old pensions? Yes, you can consolidate all workplace pensions into a SIP. It usually makes things simpler. One account, one strategy. Check for any exit fees and any guaranteed benefits you lose. Rare but possible in all defined benefit schemes. Otherwise, it's a simple process. The new SIP provider does all the transfer work. Now, I was hoping to do this with my RAF pension, but so far I haven't been able to do it. I've even asked ChatGPT, I just can't do it. Moving on to the next question, S&P 500 ETF, which one? Now again, I can't give any recommendations, but I can mention some common options. The VUSA, the Vanguard S&P 500, the IUSA, iShares S&P 500, SPXP, SPDR S&P 500. The main differences are fees. They're all low, but they vary from 0.07% to 0.1%. Whether they accumulate, which is reinvest in dividends, or distribute. If you're building wealth like I am, you would choose accumulate. Look for which platform has low fees for holding them. One thing that many people don't understand is currency. For minimal currency risk, you can pick a GDP hedged S&P 500 ETF, like the iShares S&P 500 GPP hedged UKITS ETF. What a mouthful that was. UKITS equals Undertakings for Collective Investments in Transferable Securities. It's basically a European regulatory framework what makes investment funds safer. One important point to note is that hedging isn't free. So the ongoing charge might go from 0.07% to 0.2%. This is basically personal preference. So I mention 10% all the time on this channel with anything I do online. It's basically the returns, average returns you would have got by investing in the US stock market for the last 100 years. But many people in the UK might invest in the SP 500 and not get the same returns as you would in the US. And it's because of currency risk. So it's something to consider, currency risk. If you're not quite sure, Google it, have a look into it. And just bear it in mind if you want to invest in the SP 500. Next question, FTSE or S&P or maybe global. Here are some general ideas. The FTSE 100 is lots of dividend-heavy international companies, not really UK-only risk. FTSE has underperformed the SP 500 for years. Personally, I wouldn't go with the UK, but it's personal choice. And the FTSE could offer value and dividends. A balanced option could be US, go with growth, UK dividends and value, global ETFs, easiest diversification overall. My preference is global diversification, and I've invested in the Vanguard Life Strategy 100 fund since 2019 for me, my wife, and our 2 daughters. To get started, read books like The Little Book of Common Sense Investing, and if you want my top 5 investing books, after reading hundreds of books over the last 6 years, type book in the comments below. And another thing you can do when looking at index funds is look at Morningstar to compare. What I would do the research initially, narrow it down to 10 index funds, and then look at performance. Now, I'm going to compare some index funds. The SP 500, which is basically probably the most popular index fund in the world, and it's definitely been the best performing over the last 10-15 years, I would say. If you'd have invested in the SP 500 over the last